Hi everybody, Alex Deploy here from Expert Forex, and in this video we're going to be looking at profitable random forex trading concepts. And by random I mean it doesn't matter which way the price goes, you will make money. Now I don't know about you, but I get very, and I'm battling to find the right word, let's call it frustrated, when I do a whole lot of homework, look at a chart, all the signals say go, 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 I enter the trade and it reverses and hits my stop. I just get very frustrated. And this happened very early in my career, my forex trading career. So a lot of my forex trading career has been based on finding random forex trading techniques that don't rely on the direction of the trade being right. I can be successful no matter which way the trade moves. Now, to a lot of you that might sound completely crazy, but what I suggest is watch this video, because I've given this a lot of thought and I've actually put a lot of my thoughts into action and turned a lot of it into reality. So my first attempt at random trading was based on a grid concept, which still applies today, and I have perfected this over and over again, so I'm pretty close to a final solution. And when we look at my third option, you'll see that that solution has become a reality. But essentially what I said is, if I want to be successful on every trade that I need to do, then I need to enter a buy and a sell at the same time. That's the only way to guarantee success. So I did that. I created a grid, and let's say, here's my cursor, let's say you start there, and no matter which way the price goes, whether it goes south, you'll cash in the sell. If it goes north, you cash in the buy. So there it was. And then if you keep on doing that, if you enter a buy and a sell over there, and it goes south again, you just cash in the sell and you leave the buy open. And in fact, when that happens, when it goes up and down like that, you have actually made a profit. And I'm not going to do the maths now, but you will have had 2 successful cash-ins and you'll have only 1 negative trade, and therefore you'll have made a profit at that point. So the grid system actually worked quite well, and why it's called the grid trend multiplier is because the price visits the same point over and over again and multiplies your gains tremendously. So there's an example of random trading that has become a reality. This is a recognized profitable forex trading approach which doesn't need you to know the direction of trade. And in fact, when you're using this, you are so relaxed, you don't have to watch the market, you just relax all the time, and the grid trend multiplier does the work for you. Now, it has its limitations in huge trends, but I've resolved that with appropriate lot sizing and appropriate currency selection. But also, again, solution 3, which I'll mention in this video, resolves a lot of those problems too. So I'm pretty happy that I've resolved the grid trend multiplier technique. I have it under control and profitable. I then kept on studying random techniques, because again I get very, and I'll say it, pissed off when good analysis results in your stop being hit. So the next area that I went into was the time of day hedging EA. Now what happens here is, you again at the same time every day you enter a buy and a sell in the same currency, and through a clever balance of stops, targets, trailing stops, and that kind of thing, both transactions can result in a positive outcome. So that not both will go positive, but some can have a small loss with a big gain, and that type of thing. You could even have, we have had that happen, where both transactions go positive. So the time of day hedging EA works really well. And if you look at the number that we sold by April, there was over 3,000 of these EAs sold. Only 17 refunds have been granted in terms of our guarantee, where we say, take this EA, trade it for a month. If it's unprofitable, we will pay you 120% of what you paid us. But if it's successful, you have found a successful EA. And you can see there it's 99.5% successful based on our refund history. So there's an example again of random trading. How random can you get? You buy and sell at the same time, so it doesn't matter which way the price goes, you are going to be positive. So this is option 3, where I have gone even further in terms of this random trading philosophy. So, and this is a little bit more complicated, but if you bear with me, I'll try and explain how it works. And one of the things that it reminds me of is that when I was at school, I never really paid attention too much. And when you get older, you realize how important it was to pay attention to English, pay attention to geography, pay attention to maths, pay attention to biology, because all of that suddenly at some stage will play a big role in your life. And unfortunately, when you're at school, there's a problem, and I'll explain this problem to you. The creator was very clever when he created man, but he created man with 2 heads, which is fine. I think the average guy will be very happy about that. But the biggest problem that then was created was that he did not provide enough blood to service both heads at the same time. So when you're at school, your hormones play funny games with you and you are distracted from the schoolwork. Now, this doesn't only stop at school. This actually continues throughout your life, and you get distracted all the time. And sometimes it's not only the hormones that are the reason, but there are other emotions like fear, greed, impatience, and things like that that then start playing roles. But that is one of the reasons why people don't do as well as they should do at school. And but luckily I went on, and after school I became a chartered accountant. I did 2 degrees to get to a chartered accountancy qualification. Then I went on and did an MBA, and then I further did some other postgraduate work on probability theory and statistics. So I have got that academic background behind me. When I look at random trading, I don't just look at it as a wishful thinking. I look at it from a really technical perspective. Now, when I was doing my MBA, we had an incredibly clever finance lecturer, and he taught us a technique where you can build up a portfolio of shares like you see on the screen, and you mix them around, and it's not as simple as this. There's a lot of like alpha and betas and dividends. There's a whole complicated formula that goes into this, but you can diversify your portfolio to such an extent that you factor out risk. So, in other words, let's say the economy goes down. There are certain businesses that do very well in a down economy. Like, for instance, the COVID has created a boom in entertainment. The online entertainment economy has gone crazy. So you find shares or investments that do well in a down economy, and you find investments that do well in an upward economy. And then the trick is really to minimize the damage when the match isn't perfect, and you then have a diversified portfolio where you have filtered out risk, and you can the only upside is profits. So this was taught to us in the MBA, and again I thought, why the hell are they teaching this nonsense to us? And in fact, it has stood me in good stead later on in life when I started doing my own investments and things like that. And in fact, this is what's led to the next random trading technique, and that is the technique of using a diversified portfolio. Now on your screen you can see an example of a diversified portfolio. Now I must add, this is only a small portfolio, but it does show the concepts of diversification. So essentially, the market can either go sideways or it can trend. And certain EAs do well in sideways markets, and other do well in trending markets. A bit like if the economy goes strong, certain shares go well, and if it goes badly, certain shares go well. So that's the concept. That's where I got this concept from. So when you do forex trading, you should create a portfolio of forex robots that some do well in the trending market, some do well in sideways markets, but you need to balance the risk should those markets not occur. So here's where the randomness comes in. If you create a portfolio like this, you don't have to worry whether the price is going up or whether it's going down, because either way your portfolio will benefit from that price movement. I spoke earlier of the GTM, the grid trend multiplier. Even within the grid trend multiplier, you can have different approaches. You can aggressive, balanced, and conservative. You can use different currencies, and therefore even within a grid trend multiplier you can have a portfolio that you can look at and rebalance from time to time, saying this currency is going to trend, I'm going to take it out, or something on those lines, so that your overall portfolio does well. So for instance, here we see there's a -10 in that section, but there's a +12 in that section. So overall the GTM is doing okay. But the market is currently trending, so our trending EAs, the make money EA, is doing very well, and the moving average multiplier is also doing quite well. But it changes as the market changes. If it starts going sideways, this one will stay where it is, but these ones will start picking up, and so on and so on. So that's how the portfolio approach works, is you get a balance of EAs, and here I have 74 EAs trading, and they all trading different kinds of markets. And here you can see sideways is slightly negative at the moment, but trending is very nicely positive, and random is even better. Random is the time of day EA there, and then you get hybrids that trade both trending and sideways, that also battling at the moment. Once you have a portfolio like this, you can then cherry pick. You can say, all right, well, this particular approach is the best for the Dream Machine. This is a particular approach is the best for, and then you can create there is our real portfolio, which is only about 25% of the initial portfolio. So you then say, okay, I'm going to get serious. I'm actually going to trade the best performers in this portfolio. I'm going to turn it into my specialized portfolio, and as you can see, the portfolios do a lot better if you use that kind of approach. So that's my third option. That is how I am now trading the forex market on a random basis. I don't care whether the market trends, whether it goes sideways. I know that I will become profitable because I've got a balanced portfolio of investments, and I can change those. If I find this particular investment's not doing too well, then I actually just reduce my investment in that, or I change the settings or currencies or whatever. But you'll see that all of these have positive results, and they are, look at that, all of them have positive, except this one, the Tradable MACD, negative by $3. So you can see you can find those gems if you have an initial portfolio of investment. So that's my third random trading technique that I use. I create a diversified portfolio of forex robots. Now, okay, I'm sorry, this might be a little bit advanced for a lot of people. Anyway, I thought I'd share these concepts with you in this particular video. So the GTM on its own is quite good, but you need to diversify. You need to trade a number of currencies, a number of settings, and a number of approaches. And sure, now and then an account will blow, but the others will make up for that blown account. So that's the one approach. Then the other one is the time of day EA, that just somehow on a very high percentage basis is profitable over time. And then the third approach again is your diversified portfolio of forex trading robots, and there they are. You build your portfolio, then once it's running, you take the very best out of those and turn them into a special portfolio, and you can make quite a bit of income on that. This portfolio, by the way, is only 2 months old, so these results are based on 2 months of trading. Now, I hope you've found this discussion about random forex trading interesting, and I hope you've learned a little bit about that. And if you have any random trading techniques that you are currently using, then certainly please mention them in the comments to this video. Let's get a discussion going. And I'm not talking about martingale and profit recovery systems, which are a little bit dicey. They could work, and but they are pretty dicey systems. You can see these systems are based on robust and understandable concepts of trading. So from me, Alex Deploy, cheerio.